My name is Evasamido and I began trading in 2024 without absolutely any knowledge of trading, without any capital to trade, and without any guidance from anybody on trading. All I had was an old modeled laptop that I used my WAEC fee to purchase, my phone, and internet connection. And most importantly, I had a strong belief that I would become profitable before the end of that year. That was 2024. And with determination, focus, learning new things, unlearning them, trying new things, failing, and most importantly being consistent throughout the good days, that's the ups, and the bad days, which is the down. I faced it all, and like every success story, I overcame. I started to get the right knowledge. I repeat, the right knowledge. I started to implement this right knowledge that I got. I started to follow a simple pattern that can make absolutely any beginner with absolutely no knowledge about trading to becoming a profitable trader, all under 1 year. In this video, I'm going to be covering every single detail you need to know to becoming a profitable Forex trader. Whether you're a beginner, like you absolutely have no knowledge about trading, or you have knowledge but you just want to find consistency from the Forex market. So, this video has been divided into sections. From the introduction, where you get to know what Forex is, pips, lot size, the basic things, broker integration, the basic knowledge and fundamentals that every single person that wants to become a Forex trader, wants to take Forex trading seriously, must know. That is the intro to the basics, where I get to teach you about candlestick, price movement, highs, lows, just a little bit advanced from the basics. Now, taking you to the intermediate, which is where I teach you advanced stuff, where I teach you the strategies, risk management, psychology, basically the things that a professional trader does on a day-to-day basis. All of these things, I'll be disclosing them in this particular video, up down to the final part, which is the professional level, where I'll be giving you insight on how to get funding, how to get capital, best ways to manage your trades and manage funds as a Forex trader or a newbie coming into the Forex space. Basically, this video is a step-by-step guide that can make any complete beginner that has no knowledge about trading become profitable, just like me in 2024 when I began trading, to becoming a profitable trader that makes profit from the financial market. So why I created this video is to stop the guessing, to jam back every single detail that you need to know about trading all under one single video. So don't jump from videos to videos to videos. All of this knowledge together can cause distraction. Everything is all jam packed in this one video. So what you have to do right now is sit back, get your book and your pen, because we're about to head right straight into the business of today. But before we do that, drop a like right now, like drop a like on this video, drop a subscribe. You may never see this channel again, so drop a subscribe. And yeah, let's head right straight into the business of today. So guys, we have it right here, the full trading course by Evasamido, carefully and wonderfully made for you guys. So by the end of this video, like I said before, you'll be able to know every single detail you need to know about being a Forex trader in 2026, how to start, basically to the pro level, like where I'm currently at right now. You can know all of this, you can get all of this knowledge right here in this particular video. So let's go right straight into it. All right, so right here we have what is Forex, and it says Forex trading is the exchange of one currency for another, such as dollar for euros or naira for dollars. Traders aim to make profits from changes in currency prices by buying a currency they expect to rise and selling one they expect to fall. So now, to break down what this thing has said in simple English, simply means Forex trading, or Forex, is the exchange of two currencies called foreign exchange. So if you've ever changed your dollars to naira, if you've ever traveled abroad and you had to change your currency, whatever has made you change one currency to another is simply foreign exchange. It means that you've traded Forex. And on a day-to-day basis, we trade Forex. Big banks, people who travel abroad, people who change their naira to dollars, all of these people trade Forex on a day-to-day basis. Forex trading is something that happens on a day-to-day basis. Yes, like I said, such as dollars for euros or naira for dollars. So let's say you go to the bank, right? You have your naira in your hand, right? And you want to exchange it for the United States dollars. And it says traders aim to make profits from the changes in currency prices by buying a currency they expect to rise and selling one they expect to fall. So you have your naira and you're expecting, obviously, Nigerian naira has always just not been rising, except just for a few months, or let's just say for the past 1 year, which is unlikely. But usually we always expect Nigeria naira to always be falling to, or to always be weak to the dollar. So having that knowledge, you go and sell your naira for the dollars in, let's just use the simple example, your bank, right? And you expect the United States dollars to rise, because buying a currency they expect to rise and selling one they expect to fall. So if you're giving out your naira for the dollars, it automatically means you're selling your naira and buying dollars. So it works interchangeably. The next thing we have is currency abbreviations. Currency abbreviations are short code used to identify currencies like USD for US dollars, Euro for EUR for Euro, These codes are created and regulated by the International Organization for Standardization (ISO) to ensure currencies are recognized and traded correctly worldwide. So this is more like self-explanatory, right? There is a body called the USO that is responsible for currency abbreviations, like maybe on your phone, maybe when you search, like, or maybe on online, you always see that sometimes you don't see currencies being called completely. You can see like the US dollars is short form for USD, the euro is shortened to EUR, like the Nigerian naira is NGN. So all of this shortening code is created by the ISOY so that these currencies can it just helps you to stay simple, straight to the point, and they can be traded correctly worldwide. It's just for to make everything simplified. It's just for simplicity purposes, or whatever they have added to it, but for me, I just believe it's for simplicity. So the next up, we have currency pairs. In real life, you exchange one currency for another. Forex works the same way. Every trade involves two currencies because you are always buying one and selling the other. That's why currencies in Forex are quoted in pairs like Euro USD. So, this one is super self-explanatory. Like I said earlier when we started this video, if you're going to the bank to exchange your Nigerian naira for United States dollars, this simply means that you're selling one and automatically buying the other one, right? You're buying the other one and automatically selling the other one. That's exactly how it is in the Forex market. Each of the currencies are always quoted in pairs. That's 2 by 2. It simply means you're buying one to sell one and selling one to buy one. Like, it's as simple as that. Next up, we have base and quote currency. Currency pairs. The first currency is the base currency and the second is the quote currency. The base shows that you are buying or selling, while the quote shows its value. For example, Euro USD. Euro is the base and USD tells how much 1 euro is worth. Alright, what this simply means is the base currency is what you're either buying or you're selling, and the quote is what the value is. So for example, you go into the Euro USD market and you see it quoted at 1.11530. What this simply means is that you need 1.1 United States dollars to get 1 unit of the euro. Now we have major and minor currencies. Major currencies are the most traded currencies in the Forex market and usually include the US dollar, backed by strong economies and high liquidity. Minor currency pairs are called cross pairs, do not include the US dollar. They are traded less than majors, but still play an important role in global currency exchange. So what this simply means, in most simple terms, simply means that major currency pairs are the most traded, they are the most valued, they are backed by good economies like the United States, which is why they are always crossed to the United States. Now, take a look at examples of major currency pairs. Now, we have just 7 of them. We have the Euro USD, GBP USD, USD JPY, USD CHF, AUD USD, USD CAD, and SZD USD. These are the 7 major currency pairs we have worldwide. And this is just few examples. Now, there are a lot of minor currency pairs. These are just few examples of minor currency pairs: Euro GBP, Euro JPY, GBP JPY, AUD JPY, Euro AUD. So this is simply what major and minor currency pairs are. Next up, we have exchange rates. An exchange rate is the price of one currency in terms of another. It tells you how much of the quote currency you need to buy 1 unit of the base currency. Exchange rates constantly change due to supply, demand, and economic factors around the world. So exchange rates, using our example earlier, like between your bank and you trying to exchange naira for United States dollars. So now your exchange rate is the current price of how much naira you need in order to get $1. So currently the rate is, I think, 1,450 thereabouts, and it can change due to supply, demand, and economic factors. This is exactly why sometimes it's going to go up to 1.6, sometimes it's going to even come down to 1.3. So all of these things is what changes the demand and supply and changes the exchange rate value. So this is exactly what exchange rate is: how much of the quote currency is needed to purchase 1 unit of the base currency, and in this case it's the dollars. And now the next thing that you need to know is the pip/points in value. A pip is the smallest price movement in a currency pair, showing how much a currency's value has changed. Traders use pip to measure profit or loss. The value of a pip depends on the currency pair and trade size, helping traders gain and manage risks. So what this simply means is just like humans and steps. The smallest step or the highest step a human can take is 1. Like, you cannot take more than 1 step. That's exactly what a pip is in the Forex market. So the highest movement that the market can make, either up or down, is just 1 one step, which in the forex terms is called a pip. So let's say Nigerian naira to United States dollar, so you need like 1,450 naira points. There's always going to be the point. So at the last point, that last change in the price is what we call one pip. So when the market moves 1 point away from what it currently is, either up or down, it's called one pip movement. So this is exactly what it is. So traders make profit exactly from pips. So if you buy the United States dollars with your Nigerian naira and the United States dollars increase in a point, right, you've made 1 point, which is one pip. So you're actually in profit of one pip. And now we've come to the conclusion on the introduction, which says Forex is the global market where currencies are exchanged and traded in pairs. Understanding base and quote currencies, major and minor pairs, exchange rates, and pips is key for any trader. With this foundation, you're ready to move to the next step, the basics of forex trading, including market types, orders, leverage, margin, broker integration, and more. So I believe that I've been able to simplify the introduction to forex as simple as it can possibly be for any complete beginner. We're just getting started, and yeah, we're about to head over to the next level, which is the basics of forex trading. So let's head right straight into it. So we have right here the basics, section 2. So let's head right straight into it. We have what we call broker integration. Broker integration connects your trading account to a platform like MetaTrader 5. First, you open an account with a broker, then you link it to a trading platform using login details. This will allow you to view charts, execute trades, and track your positions in real time, making trading efficient and seamless. So guys, right here is my phone. I don't know if you guys are going to be able to see it, but right here is my phone, right? And this is exactly what I'm going to be using to do all of this broker integration process for you guys to see right here. So first things first, let me turn on my screen record. Right now I'm on the XNET platform, and yeah, you have to register, right? Me, I already have an account, right? I already have an account with XNET, but for the sake of this video, I'll just be showing you guys the glimpse of the registration. I don't know, since I already have an account and there's nobody's ID I can use right now, because let me show you guys something first, right? So what you do is you click on the register, right? As a newbie coming to register with a broker, I click on newbie, declare and confirm that I am not a citizen and resident of the US. For tax purposes, United States with their problems on mine. So next up, we click on continue. So this partner code, I think I'll be having my partner code I'll be using, and I'll be putting it on the screen, and you guys can put it. It's going to be my partner's code. Maybe you can get a discount or something. I don't know the use of this partner code, but I know it's going to be helpful to me, so make sure to use it. Email address, so you just input the email address that you want to use, blah blah blah, whatever it is. You continue. Let me use an email for this purpose. I just hope I've not used this email before. This is not the email I've used already. All right, so now the next is password. So what I'll do is I'll just put in a password. All right, so now you can see it says verification step. This will take about 10 minutes. Confirm email and phone number. Okay. Deposit up to 1,000. If you verify your identity and if you verify your residential address, there's unlimited deposits, meaning that there's no restrictions to how much you can deposit. So all you have to do is click on start now, and what you're basically going to do is complete the verification process. It's just click complete profile, then they'll just, it's something that every layman with a common sense can do. You get me? And I know you all are super smart, so this is not going to take any process. So now I'll be taking you guys to my actual account. So basically, once you're done verifying, right, your account will now look like a live account. Like it's now going to be like what mine is going to look like now that I'm about to take you guys. So let's head off to my live. So guys, I've logged into my trading account, and yeah, I have no trading account to XNET right now. This is part of the things I'll be teaching you in the ending, because there are different forms of getting funding and trading funds as a trader. But this is the basic way, right? Because you want to trade your funds as a trader, right? Well, yeah, so this is it right now. I click on profile. All you're going to see is verification process fully verified, right? And if I click on it, you can see that deposit limit is unlimited. My mail, my name, my full name, residential address, all of those things. So What I'm going to be doing right now, for the sake of this video, I'm going to be depositing into my trading account. So what you're going to do when you want to deposit is you click on plus, right? What you're going to look is each of these accounts are all different with different styles or different patterns. Like each of them are, just think of these accounts like you're renting an apartment. There's a bedroom, there's a 2-bedroom flat, there is self-contained, different kind of apartment. So that's the same way these trading accounts are. They are all different. Now, minimum deposit for the standard account is $10. It has a minimum spread of 0.2 pips. Max leverage is 1 to unlimited. Commission is no commission. Now, standard cent is $10. Minimum spread 0.3 pips. Max leverage is 1 to unlimited. So that's basically what it is. So for the sake of this, you can see it right here. So what I'll basically advise you to just use the standard account, right? Just that's the basic for a beginner coming into the trade. Just use the standard account. So yeah, obviously MT5 is a real account we are going for. So type standard MT5 currency USD leverage. You look for the max. If 2000 is the max, then yeah, you look for the max leverage. I think I explained. Okay, I'm still to explain leverage, right? So I was explaining that nickname EFX or FIFX, whichever one you choose. Let me try FIFX, right? With some emoji bag, right? So save changes and then we continue. Trading password, important. This is one of the things I love about Xness. So one of the things I love about Xness is that they are really like beginner, like truthfully they are actually beginner friendly. Like a complete beginner can actually just do these things on their own. Like you guys can see how simple the process is for me, right? You guys can see how simple. So now I've created the live account. So what's left for me, you can see it's my name, FIFX MT5. You can see. So now what's next is for me to actually deposit. So right now I'm going to be depositing into this trading account right now. I'm going to be depositing the minimum I can possibly deposit. So right now I'm going to be depositing some money into it. I'm going to be depositing the minimum because yeah, just for the sake of this video. So the deposit, the minimum is $10. So oh, $10 is not the minimum deposit. What the minimum deposit is actually $12. So $12 it is. Bank name OP. It's so funny how the bank that is most active in Nigeria is a Chinese bank. Like this is like I'm pretty sure that like more than 60% of Nigerians are all using OP. Like it's crazy. This is a message to all Nigerian banks, right? You guys need to up your game. Like 100%, you all need to up your game. Stop being slow, late to send debit and alerts. Stop being charging unnecessary charges that you don't know. Which one is maintenance? What are you maintaining? Maintenance, you don't maintain for your house. So but with OP is really fast transactions, everything. They really need to up their game, to be honest. So account number, so yeah, here's my account number. I'm not going to hide it. If you want to send me money, do have to send the money into the account. So next up is 12 points. So just for me to confirm that I want to send this amount. Yeah, and you all can see it. Here's some instructions. Before you make this transfer only the exact amount. Do not transfer an incorrect amount. Do not save or reuse the account. That's the account number. It can only accept a single transfer. The account expires after a fixed time. So we click on continue. So now here is what I'm exactly. Remember, I imputed my account, so they know the exact amount account the money is supposed to come from. This is to avoid scam and all of those kind of things. So what this is, see the bank accounts. I'm still going to put it on the screen. Take a look at it right here. So I'm going to transfer this amount into this bank account and it's going to appear. So watch this. Into the trading account, $12 right now to the trading account. Next up is to connect it to our MetaTrader 5 platform. Simple as you can possibly be. So you just click on these three dots, these details right here. You click settings, you click on settings, and yeah, you can see the login, you can see the server, and yeah, the trading password. So I just copy the login, right, and head up to MetaTrader 5, click on allow, accept. No, we're not opening a demo account, we are live, guys, we are live. So you click on trade account, click on add,
we're going to be searching it. So, and this right here, beautiful, that's it, real 9. Again, paste it right here. Repeat the same process again. Trading password. All right, I remember my trading password what I imputed earlier on. So this should work, and I should see $12 right now. Perfect.
You guys can see $12 right there. So this is how you can connect whether you're depositing $100,000.
This is the same process.
But if you're on the crypto side, you can also deposit through crypto too. Maybe I'll do a separate video another day on how to deposit using crypto, but that's not necessary for this video. So yeah, so right here you can see your quotes. This is where all the pairs, remember when I talked about currency pairs, you can see USD, RUB, USD, all of these pairs, but these are not really popular pairs. I don't know why they are having all of these popular pairs that we have. Is USD, Euro USD, USD JPY. So let me just search for a pair. So if you want to search for a pair, what you just basically do is click on this search. Let's say you want to check for USD JPY, that is or USD, or let's just say you want to search for GBP USD. All you have to do is search GBP, GBP USD. So you can see, you click on the box and it's marks, and yeah, on the below you can see this is Great British Pound versus the United States dollars. So open the charts. Beautiful. So right here we have a chart on GBP USD. Simple. So here's your trade. So if you're on a running trade, you can be able to see here history, empty, settings. You can see it, Xness Technologies Limited, Real 9, simple. This is simple things. So this is just the basics of broker integration, and I think that with this I've been able to give you the full knowledge on broker integration. So right here, if you click on this box right at this top right corner, you can see buy sell, which I'll still be explaining. So this should be it on broker integration. Now we move over to the next. So guys, right in the description of this video you can use my link to sign up with Xness, and right here if you scan this code, it's going to take you to Xness page where you can sign up, create an account, and fund it to your broker just like I did in this video, and begin trading immediately. So guys, right now we are currently at the intermediate section. Right, this is where we talk about the strategy. The trading strategy is what helps you determine market direction and timing. It gives you clear rules to identify trends, entries, and exits instead of guessing. With a solid strategy, you understand when to trade, where price is likely heading, and when to stay out of the market. It helps you to know how to predict the financial market. Basically, traders make money when they buy and it goes up, and when they sell and it goes down. That's how traders make money. Now, you need to have knowledge in order to know when to buy and when to sell. Exactly. So, I'm going to be teaching my strategy on how I basically know when to buy and when to sell. Simple as that. Alright guys, so basically my strategy consists of three things. How I basically predict the financial market consists of basically three things, which is one, the trend line, the candlesticks pattern, and support and resistance. I tried as much as possible to keep my trading strategy as simple as possible, because when it comes to trading, simplicity is key. Right, unlike other things that the more knowledge you have, compound, and the more things you apply, it works better. But with trading, the more simple you keep it, the better for you, right? So basically I try to keep my trading strategy as simple as possible but as effective as always, and I try to get into sniper trades, meaning that I don't just jump into trades recklessly. I wait for good setups that has my confluence in it. So yeah, let me show you guys what I mean by all of these things. So basically consists of three things, like I said: candlesticks, trend line, and support and resistance zone. So basically I'm going to start with candlestick, and the basic two that is the most popular, right, and it's easy for a complete beginner to understand, is what we call the bearish and the bullish engulfing. That is the basic two candlestick pattern that is the most easy for a beginner to understand. So I'm just explaining just those two candlesticks pattern. There are a lot of them. There is the doji, there is the pin bar, there is the different, there are a lot of them, but I'll just be explaining the simple two for you guys to understand it basically. So we have the bearish and the bullish candlestick. So basically what the bearish and the bullish candlestick are is the candlestick that basically a kind of candlestick pattern that basically engulfs the previous candlestick. So let me say a bearish candlestick, I will put in an image of what a bearish candlestick is like on the screen. Basically we have a bullish candlestick followed by a bearish candlestick that completely engulfs the bullish candlestick. That is what a bearish candlestick is, and for the bullish is quite the opposite. A bearish candlestick that is completely engulfed by the bullish candlestick. What does engulf really mean? To be completely covered over. So that's basically what it means. I'm looking at the screen right now, so I just want to show you guys some examples of a bullish engulfing and a bearish engulfing. So what they simply mean is, once a bullish or bearish engulfing simply comes, it just simply means there's about to be a reversal in the trend. So it's a good opportunity for you to spot trade reversals. If the market is trading up and you see bearish engulfing, it simply means that the market is about to start trading to the opposite direction, and it means this is an entry for you. And if it's a bearish trend, right, and you see a bullish engulfing, it simply means that market is about to go in the other trend, which is states like we already know. That means that's an opportunity for you. So looking at this chart right here, right, we can see that for these few seconds the market was actually in an uptrend, right? And from our example above, you can clearly see that this right here is a bearish engulfing right here at this point. This is a bearish engulfing. You can see it's a green candlestick followed by a red candlestick that completely covers the green. And what happened after that? Price never crossed this part. Price never crossed above that bearish engulfing. And what happened after that point? It's starting to fall, right? This is a current market, right? From the date, today is the Thursday 22nd of January. So this is a current market, and you can see that if I want to enter this trade, I'm still it's still a very much value trade for me to enter right now, to sell right now. But yeah, this is just basically one case scenario where the bearish engulfing has worked. So now let me show you an example of a bullish engulfing. So take a look at it. This small red candlestick followed by the green blue candlestick, and what happened right after that? Okay, we can see push to the upside. So this is basically how the bullish engulfing and the red is a sign for a reversal. So if you were in a downtrend, price is going down, and you see a bullish engulfing, it signs that okay, the market is about to go to the opposite direction. The sellers are losing their momentum. Exactly the same for the opposite direction. If you see a bearish engulfing, buyers are simply losing their momentum, and the market is about to start dipping to the downside. So this is basically what a bearish or a bullish engulfing is. There are a lot of candles in pattern, but for the sake of this video, I'll just be explaining these two. And yeah, we'll move on to the next confluence, which is the trend line. So the trend line is basically what we use to determine the trend of the market. Now there are a couple types of traders. There are traders who trade with a trend, there are traders who trade ranging market, there are traders who trade choppy markets, that's market that's moving in a straight line, while there are traders that can only make profit from ranging trending market that are moving in a particular direction. Personally, for me, I trade mostly the trending market, or most of the time, like 90% of the time, I trade the trending market, because that's when the market is really making good moves. But there are some people that make profits from ranging market, right? So let me explain to you what the trend line is. The trend line helps us to determine the trend, to know the particular direction the market is moving on. So we just follow that trend. So that's what the trend line helps us. So if the market is in an uptrend, the trend line helps determine the trend for us. So we just follow the trend. It helps us get the right entry for a particular trade on the same trend. Basically, the trend line helps a lot with entry, and yeah, be it a buy or be it a sell, it helps you enter the trade at the right time to follow that particular trend. So let me explain to you what I mean by this. In an uptrend, you need to connect two lows, and in a downtrend, you need to connect two highs. So basically, once you've been able to connect, like this is the first criteria for drawing a valid trend line. Right? You need to be able to connect two lows or two highs. But in this case scenario, the market is currently in an uptrend. You can see right here, uptrend, the market direction is up. So that is, you need to connect these two lows. Once you've been able to connect the two lows, what you're basically doing, you're waiting for the third touch. And the third touch is the magic. That's where the magic happens on the third touch, because now you've had the value trend line. All you're doing is waiting for the third touch in order for you to continue following the trend, like I explained earlier. That's basically what the trend line helps you on that third touch, for you to follow the trend, because we don't want to be entering at this point right here. Because why? All of these points, like this is because we don't want to be entering at points like this, because it's very expensive. We want to enter the trade at the exact reversal point, so that we don't get into drawdowns and unnecessary losses. What we want to get into the market at the right time. And usually whenever market comes to the trend line again, then it's always a good time, because that is like a signal for another reversal, just like the bullish and the bearish engulfing. Once the market comes to trend line for the third touch, right, it's another sign of reversal. So let's play this bar replay, and let's see what happens. Let's see how the market reacts after it had the third touch on the trend line. Alright, so you guys can see right here, after the third touch, it immediately spiked to the upside. This is what the trend line does. It helps you get the exact zone for reversal. So whenever market comes to your trend line, after you've been able to get two value touches on your trend line like we did first, the third one is the magic. That's where the magic happens. You just sit patience and precision, then you get into your trade and you set your take profit and your stop loss in the right direction. So that's basically it for the trend line. Let me also make an example for a sell. Let me also make a sell example for you guys, so you how to do a trend line for a buy and for a sell. So guys, take a look at this perfect example we have right here for a sell. Right, we've been able to mark our highs, right? These two highs, right? We've been able to mark and connect them. Basically, what we are looking for is the dot dot on the trend line. That's simple as ABC. Like a complete beginner can understand this easy peasy. So we've been able to connect the two highs. What we're basically looking for is the next time market comes to touch our trend line, anywhere around here, anywhere, basically anywhere at all that the market touches on the trend line. What we are going to be doing, we're going to be selling the market, right? Because we believe that once it comes to the third touch, right, it should reverse in the opposite direction, which obviously needs to go up to come down. So yeah, perfect. So now we've gotten a touch on the trend line. You can see clearly right there. So what we're going to be doing is going to be selling now the short, and we just watch and see how price reacts. Put the stop loss at the recent high, give it a little bit space, and yeah, target 1x to 3. They just basically just let the trade play out and see its reaction. Perfect. You can see that our take profit has been smashed. You see that after it got to the trend line, reacted, fell down, came back a little bit, came to trend line, still reacted, came to trend line, reacted. Every single time the market comes to trend line, it reacts and it moves in the opposite direction. This is the power of the trend line. Just like the bullish and the bearish engulfing, it's just a way to mark and spot reversal. So it's just entry purposes, you get me? Reversal, entry, and knowing your direction, right? So it's the one of the great good advantage of a trend line is it helps you to not guess. Why? Because why? You're following the trend of the market. So it's like you're following the flow of the river instead of trying to swim against the river. You're just following the flow. So this actually increases your win rates when you're trading something that is quite easy, right? Because it does not mess with your psychology. You know why you're in a trade. You know when to come in and when to exit. So final thing is the support and the resistance zone. This is another one again. This is another magic on its own. The support and resistance. We've been here for a very long time. This support and resistance is more like the trend line, but it works more in not basically ranging market, but it works more in markets that does not have a particular trend, right? I'll first of all show you guys a broad example of what the support and resistance looks like on the chart. So take it, if you look at this example right here, that I'm about to show you guys, you notice a pattern on the chart right now. So now take a look at this. Whenever price comes to the support zone, it would react and moves in the opposite direction. Take a look at it right here. Keeps reacting and keeps moving in the opposite direction. So whenever price comes to a support or resistance zone, it's reacting and going to the opposite direction. Now, really, what is a support and resistance zone? Think of a support as the ground, like right, the floor that's stopping you from, let's just say, falling down. I'm trying to explain in a very, very simple form that any complete beginner can understand. So think of the support like the ground, the floor stopping you from falling. Just like take a look at this market right now, it's been stopping it. Whenever it comes to the support, right, the floor just reverses and goes up. I think of this resistance as like the ceiling, right, stopping you from going up, stopping your movement upward. So whenever it comes to the resistance, it always finds a way to come down to the support, goes up to the resistance, comes down to the support until it eventually breaks the resistance, right? Meaning that at this point, the resistance can no longer hold it, right? The resistance can no longer hold the momentum of the market, meaning that the buyers are now more powerful than the resistance. So this is just basically what the support and resistance is. So how traders benefit from this is whenever market comes to support, they buy. When it gets to resistance, they sell. It's just like that's the basic idea, reversal, right? Good for entries and all of those things. So that's the idea of the support and resistance. So yeah, this is basically it. Let me play more to see. Take a look at this, right? We got to, and most of the time it's not exact. It might hit over the resistance but still fall, because sometimes it might just be that the market has a lot of momentum. For example, this example right here, it went over the resistance, but came back down. Right, so this is basically everything that I can share on this particular video about strategies. To be honest, I don't believe one video is enough. This is exactly why in my YouTube channel I've been really striving to share my knowledge on trading right from when I began trading back then, and I started my YouTube channel, so you can do well to watch all of my other videos, good insights that can help you understand basically what I'm saying right now. And also you can also join my Telegram community where I still share insights on trading, more highlights, and basically sharing my lifestyle as a trader, living and grinding every single day. So it's definitely going to help you, and you'll be close up with a trading community that can actually fasten your growth. So yeah, use the link in the description to join my Telegram community. So guys, we're currently at the final section of this video, the professional level. We've come so far. If you watch this video up to this point, give yourself a round of applause. You're really ready to take trading to the next level in 2026. And don't forget to drop the subscribe right now, because this channel is going to be the only channel you're going to need in order to master Forex trading and trading in general. So drop that subscribe, drop a like, drop a comment right now, and don't forget to join my Telegram community. So let's head right straight into the professional level. So the first thing is risk management. Forex trading, risk management is everything. Never risk more than a small percent per trade. Use stop losses, calculate lot size properly, and avoid over trading. Protecting your capital matters more than making profits. If you manage risk well, losses stay small and wins compound over time. So now basically what risk management is basically you managing your risk, knowing a particular percentage to risk per trade, being able to manage losses and maximize profits. Now there's a general knowledge that basically when it comes to trading, don't risk more than 1% to 1.5%. But I believe that if it's your personal funds, right, you can risk whatever you feel like is okay for you. Whatever your risk percentage or your risk appetite is okay for you. But if you're trading like a 400 account or a profit account, what you can do is risk 1% to 1.5%, almost 2%. So that's basically it. And yeah, for the calculate lot size properly, I'll be explaining this in my Telegram community, how to calculate using the lot size calculator. So yeah, use the link in the description to join my Telegram community. Basically, risk management is very crucial when it comes to trading, because you do not want to blow your account. You want to manage your risks properly. So next up is trading plan. A trading plan is your rule book in Forex. It defines your strategy, risk per trade, entry and exit rules, and trading sessions. With a clear plan, trade with discipline, not emotions. Consistency comes from following your plan, not jumping from one strategy to another. So now what a trading plan simply is like your journal. In like for a normal person, it's like your journal. Or your day schedule, how you schedule your day. Say you wake up by 5 a.m. or 6 a.m. every day, you clean your home immediately, you wake, you do the dishes. That's what your trading plan is. The plan you plan on executing before, after, and during a trade. So it includes what your strategy is, what you plan on risking per trade, like we explained earlier. What your strategy is, candlesticks, support and resistance, trend line, whatever it is. If you will not be trading with emotions, basically what you want your trades to be, basically what you want to do before, after, and during a trade. That's basically what your trading plan must include. Next up, we have risk to reward. Now risk to reward is also included in a trading plan, but risk to reward is so crucial that I just have to give it its own page. Now risk to reward in Forex means comparing what you risk to what you aim to gain on a trade. For example, risking 1 to make 2 or 3. A good risk to reward ratio allows you to stay profitable even with fewer winning trades. Always define it before entering any trade. Like I said, I was supposed to add risk to reward to the trading plan, but it's too crucial that I just have to give it its own page. Now, risk to reward is so crucial. Now, let me explain what risk to reward is now. For example, like I said earlier, that for regular traders, right, what issue your aim should be to risk like 1%. Let's just use the example 1%. Now, you're risking 1% on trade, and you have like a 50% win rate, meaning that in every 10 trades you lose 5 and you make 5. Now, with a 50% win rate, right, with a 1:3 risk to reward, meaning that every trade you win, out of every 5 you win, right, you make 3%, and out of every one you lose 1%. So at the end of it, you lose 5, you make 5, but your percentage is up 10%. So that's the beauty of risk to reward. You know when they say that in trading there's no holy grail, but I'm beginning to feel like risk to reward is the holy grail when it comes to trading. So let's move on to the next. Getting funding through profit capital allows Forex traders to trade large capital without using their own money. You pass a challenge by following strict rules like drawdown limit and profit target. With discipline and consistency, you earn profit split while the firm provides the capital, reducing personal financial risk. Now, remember when I explained earlier how to fund your personal funds into your trading broker, right? Now, prop firms takes a whole different one. Now, a lot of traders, right, are bound to seek larger capital when it comes to trading, and prop firms stands at that bridge. Prop firms basically provide you with large capital ranging from thousands to even millions of dollars in funding. Now, this helps a lot of traders. This is why you can see a regular trader starting from zero, buying Lamborghini, Ferrari, all of these cars because of prop firms. Like this is the first point of scalability for a regular trader before he gets to seek investors and goes. But this is the first step for every trader. Most of the traders starting from most of the traders, right? So what prop firm does provide capital to traders now, but it doesn't just happen like that. They don't just give it to anybody. You have to prove that you are a skilled and you're a professional trader before they can handle their capital to you. So usually you have to make a certain percentage so they can know you are actually a professional trader before they give you the live funds into your trading account. So basically what this simply is you need to make a certain percentage, but on average, basically like 80% of prop firms out there usually is anywhere between 13 to 15% you have to make in order for them to know you are a professional and a skilled trader. So between 13 to 15%, that's what you need to make. Then they fund you the capital depending on your account size. So that's basically it. And here is a funding pips account that I just passed phase one, meaning I just made 10%, left with 5% to get live funded. So I'm not just creating content for content's sake. You can see with proof, you can scan the QR code that I am actually a professional trader with track record. And yeah, this one of me still trying to get more live funded. And as you can see, the date 22nd of January. I got this certificate right now, like few hours before I'm recording this video right now. So that is basically what it is. Forex trading is something that can change your life completely. All you need to do is get the right knowledge. I repeat, right knowledge. And yeah, it's almost impossible for you to fail as a forex trader that has the right knowledge. All you need is patience, right? So that's basically what it is. I believe that I've been able to share the basic knowledge of what it takes to start, right? I've been able to give you guys all the basics that you need in order to start your trading journey in 2026. But I believe that all the things I've shared in today's video can help you start, but does not have the ability to give you that professionalism and skill in order to become a full-time professional trader. This is why I created a community of over 763 members right now, currently learning, growing, and becoming better traders. So if you want to be part of this community that can help you fasten your goal, go out to use the link in the description and join my Telegram community. And if you want personal guidance on trading in order to become that professional trader that you desire, send me a mail, and yeah, let's make 2026 a great one. My recommended prop firm is no other than the one that I just showed you guys, the certificate funding tips. They've proven themselves that they're actually here for traders, right? Funding traders in millions and millions of dollars. They have a track record proven. I've gotten a live funded account, placed withdrawals, and still striving to get more live funded accounts from them. So basically, if you want to get a prop firm, make sure to use the link in the description to get a funding tips account right now. So that's it, guys. So I believe I've been able to share with you guys all the basic knowledge you need to kickstart your trading in 2026. I'll catch you on the next one. Peace and love, guys.